Welcome back to Yahoo Finance's live market coverage. Now, we've been talking about the jobs report today. More than 20.5 million jobs lost in the month of April alone. But one number that we haven't dug into yet is average hourly earnings. Now, that jumped 4.7% from March. So in just the last month, jumping 4.7%, rising well above consensus expectations, both over the last month and also over the past year. So for more on this, I want to bring in Ethan Wolf-Mann. He is looking into this for us. And Ethan, I guess my question to you, is this something to cheer about, or is this almost a distorted figure?
I mean, it's interesting. On the face, this is incredible. I mean, if you look at kind of the pre-COVID situation, wage growth was flat, and 4.7%. That is crazy right now. Average wages are over $30 an hour, which is just crazy. And a lot of economists have really pointed out why we shouldn't get too excited about this. The main reason why it's so high isn't because most people's earnings has gone up. It's actually because a ton of the people who are bringing that number down and skewing the average are simply out of the workforce. And so that's something that I think a lot of economists were saying it actually could be the opposite effect, and wages actually are pushed down. And so I think that the interesting thing is some of the notes that we got passed around after this release this morning said that you should ignore these numbers and don't get too excited about them. But this really does actually show you who is getting hit hardest by the layoffs and the jobs situation. And so I think when you think about that number, that is just showing you who is losing their jobs.
Yeah, and that's interesting there, because I wanted to point out, because I was also reading through, I think it was Ripley's note from Allianz, and he was basically talking about that the fact that this indicates that most of the job losses were just at the lower end of the pay scale. And as we're seeing this, then as we look forward into the future, we can expect these types of jumps, I guess, obviously to continue, not even nearly at the same rate as what we saw last month.
Yeah, I think it's fair to say that when those jobs start picking back up and coming back, we'll see that number being skewed down. And then, further in the future, when more kind of economic situation hits the fan, as it were, some of the higher segments of earnings will come down as well. I don't think there's a whole lot to be particularly rosy about in that wage number.
All right, Ethan Wolf-Mann, thanks so much for breaking that down for us.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.